welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Wednesday the 8th of May. We've still got a fairly negative outlook across markets. There's a fairly significant selling pressure that we saw coming through yesterday. Wall Street was 1.7% lower in the S&P 500. That's on the Dow, that was 1.8%, and that was the biggest down day since January. We saw selling pressure coming through European markets and Asian markets, and we've seen VIX volatility spiking higher. Now this comes as the markets are increasingly fearful of this escalation of the trade dispute. Again, the talks potentially with the fact that the Trump administration is now threatening to put tariffs up again on China this week. We've got the trade talks on Thursday and Friday. There is the prospect, I suppose, that the whole situation could break down, and therefore subsequently global growth would be questioned, and you get a significant move from the flight into safety in that environment. And what you've seen is the yen being a key performer, moving certainly stronger against the dollar, and you've seen treasury yields also falling away. Now there's a little bit of an improvement today, interestingly enough, and that has sort of reflected a little bit of a stabilisation of this sentiment, but the fear is that it could still continue, I suppose, through in the next couple of days whilst the talks are ongoing, and to prevent, I suppose, the imposition of these tariffs. Now, with regards to other factors we've got at play today, we've had a rate cut from the Reserve Bank of New Zealand. That has driven the Kiwi lower. Amid the prospect of falling inflation expectations, also growth, unemployment being an issue that the RBNZ feel that they need to cut rates to record levels to try and combat. And there is the prospect, I suppose, of further rate cuts on that regard. Now, we've also got Chinese trade data. Now, the trade surplus actually came in much lower than expected, and that was driven by an increase in imports and a decrease in exports. Now, on the flip side of that, I suppose you could actually argue that that is reasonably positive for markets, and you can actually see that the DAX is outperforming today, because DAX is driven by trade. China importing more than expected is positive for German trade, so that is that's the read through there. So you've also got the Australian dollar as well. Similar argument, is positive for the Australian dollar, but as to whether that continues with regard to the fact that you still have the overhang of the concerns over the trade dispute still yet to play out, and I don't know whether those rallies are going to last. So that's broadly where we're at today. Now, in terms of data points today, you've got the ECB minutes for its recent meeting. I suppose you'd be looking out for anything that alludes to subdued inflation, subdued growth numbers, the outlook for those, and also looking out for any chatter around tiering of deposit rates, and also the teltros as well. Now, my chart of the day is the FTSE 100. Now, as I said, equity markets have fallen sharply, and FTSE is just consolidating today. But that decline on FTSE yesterday, that big, strong bear candle, which saw FTSE falling 120 ticks on the day, has now broken a couple of key support lines of trends. You've got the uptrend that's been in place since December, that got broken yesterday, and also an uptrend, or a shallower uptrend channel, that the support of that got broken yesterday as well. That uptrend channel that's been in place for the past couple of months got broken. So this is really the market turning corrective, and looking at the momentum indicators, the RSI falling to its lowest since December. The MACD lines accelerating lower, stochastics in bear configuration. This also sets up for selling into strength, and a continued corrective move on FTSE 100. The reaction low from March was 7147. That could come under pressure now, but you've got this building downtrend. That downtrend comes in around that pivot line. That downtrend comes in at around 7380 today. The hourly chart shows you a breach of a pivot line around 7350 as well. So a basis of resistance around there. You've got the hourly RSI failing in the mid 50s, so any unwinding move into 50 to 55, 60 I think is a chance to sell. You've got the MACD lines failing underneath neutral on the hourly, so any unwinding move back towards neutral on the MACD is a chance to sell. So is this the a market to chase lower? I'm not entirely sure yet. However, I think that there is further downside that we're going to see, and you could easily see, given the fact that the hourly indicators are a little bit oversold, maybe a better chance to sell. But certainly the outlook is changing on FTSE, turning more corrective, and a retest of 71.47, that March low, and potentially 70.40, which is the February low. So I wish you good luck in your trading today, and I will speak to you later.